Good evening, everyone. Welcome to closing comments here on November 17th. Let's jump right into our charts and see what kicked off the new week. First up is February 26th live cattle. Over the weekend, we did discuss on our week 46 market watch that this live cattle market is rolling out of this December contract and over into February 2026. So going forward, as we move into week 46 here, this February contract will be the new front month going forward and throughout the rest of the year. Today we did see a nice start to the week for the cattle market, both live and feeder markets, showing a nice bounce and finishing there above Friday's high and our bull pivots, which is a good first sign of life to start the week for the bulls. At the moment, we continue to see good support here on this 200-day moving average, which is acting as long-term support. This market failing to push through this multi-week low right around 215 to 215 and a quarter is a good sign of life here from the bulls as they continue to defend this key level. Look for them to continue pushing up here and get a little bit more relief rally underway after today's finish above that bull pivot. Bulls want to take this momentum from today's session into tomorrow and push back up here on this 20-day moving average and potentially up into those prior week highs. At the moment, we are seeing good signs of life and good signs of support down here with these equal lows and good buying activity down here near this 200-day moving average. Bulls want to continue to push up and put some more pressure up here on this overhead supply zone between 228 and 232. Bulls definitely have the work cut out for them. It's going to be a tough climb out of here, but at the moment we are seeing the first signs of life and some potentially some structure being formed here. Bulls need to continue to push up here and keep this market trading sideways in between this 215 to 230 range to have any signs of life here going into year end. However, we still do have plenty of overhead supply and resistance above. Look for the bears to get aggressive once we push back up here into the high 220s, low 230s. The bears are going to want to continue to attack down here on this 200-day moving average. If they're able to break it and get some more offers down here below 215 and a quarter, it'll keep this downtrend rolling, and the bears will start to sniff out this $2 mark. So it's going to be a key spot for the bulls to defend here going forward. We want to see this market start to carve out some structure here, trade sideways for a little bit, and potentially create a breakout point here as we move into the last month of the year, and potentially get a trend reversal here before the year is up. But still a lot of work to do before we can get there, but first signs of life here, which is a good sign from a bull standpoint. Look for them to try and keep this relief rally going into tomorrow's session. We want to see them chew back up here into the 230s, but it's not going to be an easy climb out. Look for resistance to step in up here near 230. Over to the January feeders now. Pretty similar action today with that lower open, immediately responding with a push higher off that opening range, finishing the day up there near 326. Nice strong finish above Friday's high and that bull pivot, looking like a relief rally could get back underway here. Like we saw last week, there was still plenty of resistance up there in the 330s, so look for the bears to step in and offer some selling pressure if we continue to push up here towards this 20-day moving average tomorrow. Sellers are going to keep trying to push down here on this 200-day moving average and attack that 310 level. If they're able to push down here through the 200 and our bear pivot for the week, look for the downside to continue and start attacking that $3 level and potentially beyond. But at the moment, we are seeing some good signs of life, good support here at that 200-day moving average. Bulls want to carve out some structure here and potentially create a launch point for a reversal into year end. It's going to take some time for that to all play out, but good signs of life here to start the week. Look for this relief rally to continue into tomorrow's session, but look for resistance up here in this 332 to 340 area throughout the rest of the week. Next up, December corn futures with a little bit of a rally here today. Last week we did have a nice little finish up there, or push up there above that 437 bull pivot before Friday's action immediately reversed it, sending prices back to that 20-day moving average. Today we did see a little bit of a rally, creeping back up here into the top end of this range, but failing to get a close above it. At the moment, we expect to see this choppy, sticky action continue between 437 and 426 until we can get a solid close beyond either one of these pivot lines. We expect to see this choppy range-bound action continue in this corn market. Next up, our crude oil futures, seeing a little bit of balance action here today. We did see today's action trading inside Friday's range with a little bit of a bearish lean to it. Finishing the day down there near 59.5. We are rolling over from that December 25 contract over into January 26, so make sure you're trading that January contract here going forward. At the moment, looking like we're seeing some resistance, but this market just remains very choppy with a little volatility, so look for this thing to continue chopping up here around $60. We do still expect to see a nice slow bleed lower, but don't expect any really fast or major moves. The bears do have the upper hand here at the moment, but everyone's been pretty comfortable around the $60 mark. Look for a slow bleed lower to continue or just more choppy action here as we trade around $60. And equity markets continuing to show signs of weakness here today. We did see a little bit of support early, but late flush lower got this market rocked back on its heels. Finishing the day down there below that 50-day moving average. Lower high last week, and this close down here below the 50 is definitely raising some caution flags here in this equity market. S&P and the Nasdaq shown some weakness here over the last couple weeks with that lower high, while the Dow did put in a new all-time high. However, today's breakdown here, flushing down here below that 50, finishing down there below it as well, showing that these equity markets may be in need of a bit of a cool off. We have had a pretty impressive run over the last 7-8 months off those April lows up here into new all-time highs. If we do get some continued action down here below 66.55 tomorrow, look for a more corrective move to start to kick in. Look for these equity markets to start trading back down here towards this 200-day moving average, acting as long-term support. A little bit more of a 8 to 10% correction could be in the cards, but this market has just had a very impressive strength throughout the summer and fall months. We could see a little bit of a corrective move here, dip back into some deep value areas, but this big picture uptrend still remains intact, and we expect to see a little bit more of a corrective move here, get bought back up, and see this market start to turn back up here towards 7,000 before the year is up. If the bulls are able to continue to defend 66.55 here, and we do start to push back up here into Friday's high and today's high, we could see that rally kick back into gear, but definitely seeing some signs of weakness on these indexes and the underlying names. So do just want to encourage everyone to be a little bit defensive here until we start to see some smoother sailing. But in the meantime, we could still see a little bit of downside from here. Thank you everyone for tuning in. That's all we got for tonight. We'll catch you guys tomorrow.